U.S. stock futures are up ahead of the open after a strong day on Wednesday, in which the S&P 500 saw its best day since December. All eyes will be on Ben Bernanke today as he testifies on the state of the economy in front of Joint Congressional Committee. Can this rally be trusted? I'm Taylor Schrontz, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street. And together we bring you the morning call. Scott, we have a really interesting day on tap. We have the ECB keeping things unged, but China came in around 7 a.m. this morning, taking down interest rates about 25 bips, and that shot the futures way up. But before that, we have to take a look at this week's action because yesterday was very impressive if you were a bull.
Well, it's impressive if you're a market timer. You know, there's been a lot of different ways to tactically time the market. You know, earlier in the month, just so to speak, you had the Head and Shoulders top pattern where we triggered and we went down about 120 handles. And then earlier this week, you had a bottom type formation. We broke below the 200-day, came back above. Good spot to cover some shorts, decent spot to get long. And if you did so, you didn't have to expect a 50-handle move, but if you did the right trade, you were somewhat rewarded.
Right, so yesterday, you know, a lot of people were asking at these levels, do you go short? And clearly you couldn't because the trend was incredibly fast and furious. But not only do we have China coming in with the interest rate cut, we have jobless claims today, Bernanke and a whole bunch of Fed presidents are speaking. We have consumer credit at 3. So Scott, what are we doing on the open here? Are we going short or are we going to continue to buy into what kind of seems like a strong trend at this point?
I came in yesterday with like 4 longs, and I got rid of those, and I have a few others. But I'm actually looking to short some of the indices here. So if you look at the chart of the SPX, you will see that you had a nice 3-day move. And granted, we came down pretty far, so we were stretched. This was your Monday reversal. Here is your Tuesday. Let's get a little long cover, and then wow, look at the size of this bar yesterday. Yesterday, I'm happy I didn't start shorting early because I figured they might take guys a little early to the cleaner. So for me, I'm starting to short in this area. I think here's your point of reference. That's 1334. I'm short tier 1. The spider's right around 133-ish. So if I put a chart up of the spiders just to show you, here you go. Spiders right now, from where they were of about 127, closed around 132. So into this 133, 134 resistance zone and prior pivot, I would say tactically it's a better short than long. But, if we start breaking above 134, I'm not going to be feeling well today.
Right. Well, what's really tough is that the bulls are predicating their case on QE3 speculation, which is certainly not, you can't predicate your investment thesis on hope or speculation. But what we're going to do in the sector spotlight is take a look at names that have been holding above averages, and we're going to kick that off with Apple.
Yes, Apple has been a great vehicle. It hasn't showed much power, but it's above the moving averages. It's holding in really well. The pattern's shaping up. This is a good barometer to see whether or not we could really get going. So if you look here at the chart of Apple, you will see, this was the last time I got really enamored. This is when I started talking with Jim about it, saying, look at the size of this potent move. Held the 100-day, went into resistance. Market wasn't strong enough to break it through. If you look a little closer here, you will see, remember this day, we shorted below here, reversed higher. Now it's coming into this trend again. It's opening above it. So if Apple, tactically there will be some guys that try and short Apple in front of 580, 581 thinking, the market is a sell, not a buy. But if it gets above this and if you see it squeeze and close above the moving average of 584-ish and continue and powerful, then I have a feeling that the shorts are going to get taken for a bit of a ride.
Moving along to another name where market participants have been putting money because they see this outperformance as Under Armour. Curious to see how this performs today because it is a performance name. Lulu just came out. We're going to talk about that later in the call. And their guidance disappointed. So I want to see how these UAs, the Nikes, react off of this Lulu quarter.
Well, once you have a fallen leader, and Lulu has been a leader, it's like one of the generals taking out a battle.
Especially in a highly correlative market that we're in right now.
Exactly, and retail's been a little bit more have-nots, where you have the Tiffany and you have the A&F and you have the ones in the doghouse, and then you have Under Armour, which really looks good here. But if you go to the chart, you will see Under Armour is trading near the highs. So again, on this chart, here you go. So at this point, question is, in this type of market, are they going to let stocks break out? Because typically in bear markets, you have breakout failures. They use it for distribution. So if they can break this out and it can close strong, another feather in the bull's hat. But again, with Lulu down 8 points, there might be a little bit of weakness or a little tentative nature here in Under Armour.
Moving along to Amazon, another real strong retailer. It's getting close to that 220 level. Do you think it could continue to break there, or do you think we'll get some resistance at that point?
I think, again, bears are trying to defend levels that in weak markets you don't break. And if you recall on Monday, you had that potent day in Amazon, which would reverse it. And if you actually look at the chart, you will see it is holding higher. Look what it held. It held the 50-day, not the 100, not the 200. So it is still showing strength. I know we were shorting it here based on the fact that it can come into the earnings gap, but it still held a nice amount. So I think this is another sign. Look at yesterday's high as your pivot. That's 218.40. If it pushes through and doesn't look back, I think that this line will all of a sudden be erased. And then you have this whole new, base type pattern here. And this one should be one of your go-to stocks, or at least look for strength if the market tries to be strong.
Right. And with the retailers acting well, MasterCard has certainly been acting well. And this one's had a nice 3 days. But do you continue to chase highs at this point?
Again, that's the big question here. We went over this yesterday as a buyable strategy when it broke a descending channel, and it behaved very well. You go to the chart here, you could see, tactically, you had a nice little sell signal up here. Take your profits as it reversed. Then as it broke this uptrend, another way out. And then down here, held support. We drew this descending trend line. It broke above, closed strong. It's opening today. I would say tactically short term, probably sell a little bit into this moving average right around 427. It's probably opening near there with the strength. But overall, on a macro basis, it's definitely more of a hold, and it's more quality than some of the other names out there.
All right, and let's wrap it up with Expedia's Priceline's been coming in. Expedia has been doing relatively well, but we see some consolidation at the highs here.
Well, Expedia yesterday flexed its muscles. We've been talking about the power here. And Expedia, there's been no bear market there. It shows you how you could use patterns, you could use relative strength, and look at this one. If you go to the chart, you'll see, we talked about this earnings gap. Look at the size of it. It never came in. I showed you Amazon, even though Amazon's strong, it actually came in. It's above the moving averages. I drew this line yesterday, and I guess it actually happened, but I didn't trade it. Closed at highs. It can continue. If you're long it, just make sure you trail it. If you're short it, just I think you're being a bit stubborn and not looking at the action, and should have a long time horizon here.
Right. All right, guys, we're going to go to a quick commercial. When we come back, Scott and I dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the Morning Call. We dive into the trenches. We're going to look at the social media names, and we're going to kick it off with Facebook. This thing has been a mess since literally day one, whether it was pricing, whether it was the way the NASDAQ opened the stock. We saw an update yesterday, so this is a little bit something interesting to talk about here, Scott.
Well, everyone's trying to figure out where it should have been priced, what the valuation is, whose fault it is.
Right.
At this point, it's a moot point.
Right,
Who
it's neither here nor there.
Exactly. You took your losses. No one took you, with handcuffs and said you have to buy Facebook on the open. Everyone chose to do what they wanted to do. And as far as NASDAQ, I do still think that it's more the underwriter's fault. If they didn't price it so high,
At 100 times?
It would have been such a rush for the exit, so they couldn't handle the order flow because maybe 42 wasn't the correct open. You should have had it at 25. But anyway, what I've been looking for is a reversal strategy. And we see a small one. I've tried it a few different times, trying to be tactical because that's what I do. I try tactically to get into situations. So if you look at Facebook here, you will see ever since the IPO opened, there was a sell right here. Gap down sell, it paused. Last time, if you wanted to try it, this was your out. This was your point of reference. If you follow me or Jill, you know that this was it right here. What was this? This was 30.94. Once it broke there, it was another sell signal. Right. I actually tried being long it last week. This was a nice reversal. Then Bernstein downgraded it. So yesterday, I got long because what? The Red Dog reversal triggered. It went back below. It went below 25.75, got some people out, stopped some people out, came back above it. So I went long with a stop at the low of the day. It closed well. So now the question is, if you look at this chart, you haven't had 2 days in a row yet. So at this point, I'm long some. If it starts to get above 27.20, I think I'm going to add. Then you have, 27.76, and then, it could be a nice trade to this 28 level. I wouldn't say this could be the bottom of Facebook, but maybe 25.50 is a round enough number.
Moving along to Zynga, this is another one too that's been smacked around in sympathy, but that's the same question serves. I mean, is there really a fundamental story behind this? Was it priced too high? What's interesting here, those second half games that they're releasing for 2012 could potentially serve as a catalyst, and they did have a relatively decent quarter.
What's interesting about this is every sell-side guy said, this stock's going to be 18 to 20 by Facebook. And a lot of technicians like me, I actually lost extra money because I'm like, you know what, it's Zynga. Everyone says it's going to be higher, and I didn't follow the technical sell rules, because if you look at this chart, it gave you so many of them. You know, this shooting star, it doesn't get more clear cut than that. When it breaks out and fails, and then when it broke this little trend here, and then look when it broke this little pivot. When it went below 1125, you should never look back. And then I guess you also had another sell signal when all their insiders used a secondary to get out. So PS, look where we are. I actually bought it on Monday right here. I'm not trying to say I'm perfect, but I saw a volume spike, got in, figured maybe it was oversold enough. Yesterday was clean, still long some. I'm not really looking for much. I think, you know, this is like a trash for treasures trade. Someone's trash could be my treasure, because if you could trade it from $5.90 to almost $7, that's a nice percentage gain. So I think that is a somewhat feasible move. And then who knows, if people get excited with second half games, it could see 8 and maybe even this moving average right here. So right now, this is your pivot to trade against. Resistance 1, 2, 3.
Scott, you know what though, even though it wasn't one of your best trades, I think it was a really great example that you showed that and you were able to say that. It's always great to be humble when you're trading, because you know what, sometimes when you don't follow your rules and you deviate from what you typically use as your trading patterns, it's just a good lesson to learn. And even as a professional who's been doing it for almost 20 years, you know, your rules, it's just a great indication that your rules don't change and that you do have to be disciplined. So I'm really glad that you showed everyone that example, and it completely played out perfectly. So thank you for showing us that. Moving along to LinkedIn, here's another one. It's not trading as ugly as Facebook because it was valued differently at the IPO. But is this another one that's really overvalued at this point?
At this point, I think it's not, and people keep just putting it in the Facebook category. And this was a stock that was a go-to stock before Facebook, and then once Facebook came out, it just started not to trade well. So for me, again, another reason to have stops out there, switch gears, because we trade real time. And when complexions of stocks change, you don't stick with it. You don't say, I don't want to be wrong, because I said I do think that LinkedIn could be 160 to 180 in the next few years. But short term, if you look at the chart here, you will see, you know, again, look what happened on earnings. When you don't get follow through on earnings, it's always a little bit of a red flag. And then look what happened here. This one day engulfed this entire upper range and somewhat broke this uptrend. So here was a high level sell signal. Okay, then especially once it closed below it. And then, you know, if you didn't get out there, we talked about this gap. Look at this gap. This is from when Goldman Sachs upgraded it. And that was another way. I'm like, you know what? If you want to short or use a stop here, you know, be my guest. It makes sense. 96 to 98. So at this point, you know, it's trying to bounce off the lows. You know, you have some room back to 99.25. It's not really showing much relative strength. So it is really no compelling reason to be in it. If you're in it long term, okay, just know that maybe if it gets below the 200-day, you should, you know, give that a second guess or a second look. But at this point, it's more broken than compelling.
Let's wrap it up with GSVC. This is a really interesting name because it's a mezzanine company for these social media names. So before Facebook IPO'd, we had a couple traders in the chat rooms trading this name off of the anticipation of Facebook coming out.
Well, this one too. I heard every story out there how this one's going to be X, Y, Z, and you know, as soon as Facebook was a debacle, you had to get out quick. And I think it started to go down before that. But anyway, if you look at the chart here, again, this is why you have stops. Once this broke, you know, 18, that was a sell signal, or even when it broke this 1650, it showed you a failure. So technically, this was your out. I know if you were buying here in anticipation of a breakout, you know what? Sell some and get out of the way. And if you did, you saved yourself a move all the way down to $10. So at this point, you know what, I tried a little bit yesterday. I think, again, just like a Zynga, it could have a bounce to 12 or maybe 12.95. But at least we have a point of reference here. There is some talk. You know, I use Twitter. You use Twitter. Twitter's really powerful. Now there's talk that they might not want to deal with the same ramifications that Facebook had. So there might be some kind of private equity deal, and that could be good for this. So that's the chatter there. You know, I'm not allowed to say the word chatter. That's the talk there.
Speculation.
That's a speculation. So, you know, at least it's a point of reference, and I think it's a trash for treasure trade, but that's all it is.
All right, let's move to quick hits for some quick cash. Let's look at GLD. The market was up over 280 yesterday, so it's no surprise that the gold ETF came in.
It was actually surprising. I was long gold, and I was treating it as like a lack of sovereign nation currency trade, whatever. And PS, you know, we opened up and it was up $1.50. I'm like, all right, that's cool. You know, I've been in since Friday. You know, let me see how it handles the intermediate downtrend. So I sold a little bit into 159, and then once it started to weaken yesterday, I get out of the way. And if you look at the chart here, I wouldn't say it's game over, But this was constructive. This is when the catalyst happened on Friday. It tightened up here, so I was looking for a breakout trade. It tried and failed. That got me out of the way. I think if you're more committed to gold, I would use your stop here at 156.16, or really this gap here. As long as it stays above 155, I would say it's in the cards to continue higher, but I never want to see a day like this. So if it all of a sudden engulfs it and gets above this on Big Ben's speech, fine, but right now I'm not in gold.
Moving along to Microsoft, it's had a very impressive showing at E3, thinking outside the box with Xbox. I think the new product with that is going to be Smart Glass. So it's had some pretty impressive action.
I'm upset because I avoided it, and Sperling was like trying to twist my arm. He's like, I'm buying Microsoft on the 200-day. Early in the week, I'm like, you know what, I really don't want to take a portfolio approach, but if you buy these mega caps right, you could be rewarded. We were actually a little spoiled because Microsoft gave us actually momentum in the beginning of the year, something we don't get from these mega caps. So buying it here at the 200-day was definitely a prudent / calculated thing to do. And here it held the 200-day. Nice day yesterday. You still have some room here. I think that this bounce could take it all the way to 30.78, and then we'll see what happens from there. But right now, if you bought it the 200-day, nice tactical trade.
Moving along to Lulu, we spoke about this earlier in the call with UA and Nike. They just reported the quarter this morning. Margins were good, sales came in nice, but they took guidance down. And I think the question that everyone is asking, how much longer can this yoga trend really continue? How sustainable is that?
Well, I use their shorts, and I'm a cyclist. No, I'm actually a triathlete. I'm not a cyclist. I was out with these guys yesterday. They were nuts. But anyway, the stock right now is down about 8 points, but it's coming into the 200-day. Lulu has not broken its 200-day in a long time, so down $8. I don't take stocks into earnings usually. Sometimes I do options. So to me, it could be an opportunity. So I'll look to see how it handles this 61.16. But if it can't bounce off of it, get out of the way, because you have a gap that could be filled right here that starts at 58.50. But I wouldn't be just shorting right here. I'm going to look to see if there's a tactical divergence to potentially get long.
Lulu on the low?
Yes, on the low down.
Okay, that's the gong for me today. Moving along to CSTR, that was up 6% on the Starbucks deal.
Yeah, this stock actually is holding in somewhat well. If you look at it, it's above the moving averages. I haven't traded in a while. It's in the game. Yet it held higher. It's well above the 200. It's above the 100. It's now getting into the 10-day. So I do think it could be higher, but I think you really have to be a Coinstar fan, which I don't know enough about it.
All right, we're going to wrap it up with one of the ag names, my 2012 pick. Unless you've been under a rock, I love this space going to Q3 and Q4. We're going to take a look at CF. The ags have actually had a pretty decent week.
Yeah, they bounce off the lows and just shows you that you could time these. So this is the first look at me type of trade. You need a sector to wake up, and then once they wake up, you have to see if there's commitment to the wake up call. And if you look at CF, you'll see right here, it just reclaimed to the moving averages. It has a boatload of resistance coming in here at 178. So at this point, you have a somewhat of a double bottom in place. Here is some resistance. It could pause around here, but if it maintains an upper level consolidation above 166, there's a chance it clears here, and then you see about 178, 179 there for a trade.
Well, in 2011, we had a really good time trading this. We did really, really well trading CF. And on June 30th, there's a U.S. crop report that comes out. So you're going to see a lot of volatility with these names. So we might have some great opportunities coming into that. So we'll have to take a look at that next week as well. But guys, we're going to have a busy day today. Lots of action with that Chinese interest rate cut. Bernanke speaking, lots of QE3 speculation. Catch Scott at the end of the day. Options, profits, real money, and T3Live.com as he wraps up the charts. Have a great day trading.